Absolutely, Nancy. And of course, as I said earlier in the program, none of this is happening in a vacuum. You have the situation over the last 24 to 48 hours certainly has made things a lot more interesting with President Erdogan and his son-in-law essentially taking the chairmanship and the control of the country's sovereign wealth fund. So a lot of questions over what's going to happen next, not just in terms of this rate decision, but also in terms of the country's economy and the future stability of the country as well. I'm joined now by our guest. Candir, talk me through what's happening in Turkey today, because not to put too fine a point on it, but a lot of people are very, very worried about the stability of the currency, about the stability of the government, and certainly what the president is really going for here.
Well, Hadley, the current situation of the country it doesn't look very nice. I can tell you that from the beginning. But if you talk about the basis of the financial model, financial stability of the country, it is actually much better than countries like Argentina, where there is the interest rate is 60% and they still are suffering to return back from that position. In the current place, our situation will be dependent on the central bank and what their action will be today and going on from today. So basically what we are expecting is around 300 basis points rate hike on the central bank interest rates, and then a solid message that they will be following through and then hiking again towards the end of the year. That's what I was going to expect on this one.
So you're expecting a bridge over these troubled waters?
Well, I expect some of the volatility to come down to manageable levels. That's what we are having issues right now. We have some political issues that also affecting this. And if we can see some resolve on that, some news on that, good news on that, then along with the central bank rate hike, it will be a much better situation for Turkey. And also, you mentioned the wealth fund. The wealth fund is actually haven't done much in 2 years' time. There was some indecision on how they will proceed, what they will do. Now that we see that Erdogan is taking the reins in this and then taking over the wealth fund, basically, but he won't be managing the wealth fund.
His son-in-law will be.
His son-in-law is also the financial expert over there. But there is the general manager for Malaysia that has been working on Islamic-based wealth funds for a while, that is very experienced in this.
So you think this move should give confidence to the markets?
It should give a direction on the wealth fund, but the confidence will come from the central bank, not from the wealth fund. Wealth fund is there to keep Turkey in line with the volatility, basically.
Is there a potential for another rate hike later in the year, do you think?
Well, technically speaking, purely technically, we should have seen some slight rate hikes as the Fed started hiking. But Turkey went for a growth strategy to differentiate itself from the other emerging markets, which all of them, they went for rate hikes immediately after Fed, which delayed the hikes actually and increased the hikes. Now we see that along with the budget motivation from the new mentality of the Turkish government, we will see some rate hikes this year and next year. But honestly, these rate hikes should be the ones that shouldn't restrict the business in Turkey. Those should be the ones that put Turkey back in line with other emerging markets, so that along with the high growth, it can be a more stable country on the currency side.
So you think it's not too late? You think that the president and understands the economic situation, and certainly in terms of the central bank, that we're going to see this rate hike today?
Sadly, even Fed was late when they first intervened in the economic crisis. The first intervention over there came from Treasury, if you remember. And then Fed came in, and then we had a lot of discussions after they started cutting rates and then boosting the liquidity. Now that liquidity is not in Turkey. That liquidity is not in emerging markets. So these rate hikes, they will come, and they should have come, but they should have come in smaller increments. Now that they adopted the differentiation strategy, as I said before, these rate hikes are coming in a bigger sizes. Normally, a country like Turkey doesn't need an interest rates, policy interest rates above 20%. But a 20% to 25% rate this year and sustainable tightening on the central bank side in Turkey should provide some relief in 2019. That's what I'm trying to
So
say.
some positive news you're feeling will be coming out of Turkey later today. That's your outlook.
Today, on the central bank, I am expecting some positive news. I'm expecting some positive news on the political side, hopefully. And along with those two, then we should see the volatility come down. Now, if you look at it, then we came to this currency levels through the political volatility first and the central bank volatility next. So those two has to resolve, basically.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.